Good morning, good morning, good morning. Welcome back, everyone. We are doing a new video on a new asset, Velo. It's a crypto coin. It was requested by one of our viewers, and we're going to try to do as best of an analysis we can on this with technical only. We don't know any fundamental on this. So you can see Velo came out early in July of last year. It has been just tracking sideways, and then all of a sudden in January, December, what day is this? It was March. Okay, well, March of 2024, you got this explosion upside, downside, held above where it was actually starting this markup phase, and we've just been trending up since. And it does look decent for upside continuation still because it's still holding above support, and it's a higher low. It's the third higher low. So that's a good thing. One bad thing I can say is that the volume has a bearish divergence. As in, the buyers have slowed down as we've gone higher. The bearish divergence looks like it's playing out right now. Now we need to find a bullish divergence, which is basically when the selling stops and as we go to the lows, such as 1.5 cent, we want to see the selling volume slow down as we go lower, and that will actually build up a bullish divergence, and then you could see a quick pop up from there. So that's what we're going to discuss moving forward as to what's going on in the consolidation of this. If you guys are interested in videos like this, please subscribe to the channel. 80% of you are watching and not subscribed. Please help me out and subscribe to the channel. Leave a thumbs up. Comment on the comment section below, letting me know how I'm doing, or letting me know what next coin to do the video on, or stock, coin or stock, not a problem. And share this video with other like-minded individuals so you guys can all make sure you don't lose money in these markets if we don't have to. Aside from that, if you're interested in trading with me live, feel free to join the Discord server. Link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend that helps the channel grow, like our MEXC link, which is where we do all our trading because it gives us the lowest fees and it didn't get hacked for 1.5 billion like Bybit. So this is where we do all our stuff. If you guys have any questions with the exchange or fees or anything, you could always DM me and I'll get back to you. All right, so now back onto this. I've already drawn the fibs, but I'm gonna quickly do a rudimentary analysis so you guys can see order blocks in a sense, okay? So this right here was the first area it broke out of. Then all we've done is sit on this support here, okay? And then now what we're doing is we're sitting over here on this new support. So those are the three ranges. Now let's color these up. Let's thicken this up a little bit. Let's minor this out a little. Okay, so let's make that one white. Okay, so as you can see, this is where the original started. This is where the market maker, once he bought his position, he's now marking up price to take his profit. I'm going to remove this one so we can see it clearly. And I'm going to remove this for now so we can see it clearly. Okay? So this is how we are moving sideways and looking for where we can act next, in a sense. Okay? Can I do this? Hide. Cool. So, another thing you can see is this. Okay, so looking at it like this, you can see we're in an uptrend and we are following the uptrend retail trend line, not breaking the lows. The trend line is also, I'm going to actually remove this channel. We don't need that one right now. The trend line is also holding us above the EMA support, which is 1.5 cent, and the resistance of 2 cents is what's keeping us in this 0.5 cent range. Now, as long as support holds, look what happened here. support held sideways, took liquidity and used it for upside push, right, into the channel. Every time it comes into this channel is like a nice buying opportunity. Here's your accumulation triangle right here. Okay, and that's what got broken up to the upside from there. All right, so let's just keep that. So from this accumulation, you got the markup phase, and then over here is where you started distribution. Okay, here's your distribution. Here's your distribution. All right, so here's your neckline. So what we're trying to do is get this next accumulation done. Okay, worst case scenario, it breaks the channel and comes back into the original lows of less than 1 cent, 0.08, 0.008 cent. Okay, if it's strong, it won't go underneath 1.1 cent. It should not go underneath 1.1 cent if it's strong. If it wants to grab that liquidity, like it's been doing, it can come over here, grab that liquidity, looking left. Okay, looking left, it can take the same liquidity from these guys. It won't go all the way to the low, but it'll come as close as possible because this original buyer will defend it. And then you can see the markup phase. So that is one possibility if the market does not have the liquidity to hold sideways and someone just wants to get out and panic sells the supply that he bought all the way up here, he can market sell it and the buyers will probably be sitting in this range here to pick it back up. Okay, that's if we lose 0.15 cents. If not, that's probably going to be where the buyers are sitting and picking it up at from that level to the bottom of the channel, which is around 0.12. Okay, and then once you have open and closes above 2 cents, you're basically looking to go right into the top of the channel because you're consolidating, and then what's going to happen is once you get above this price action, you're going to start doing this expanding wedge fashion, okay? And that's when you're going to find the next resistance to come back in this level and find some support before you do it again. So that's kind of like how I see this consolidation playing out. This is just how I see it. This doesn't mean it's gonna happen. Today in the morning, I read someone's comment on the last video I did on Cardano going to $3, and they're like, "Good try, it didn't happen." Please reach your hand across your face and slap the shit out of it. Do you think that Cardano was going to go from 80 cents to $3 in a day? Like, do you understand how markets work? Do you know how much market cap that is? Okay, to have a freaking 500% gain. How much money has to be entered in? Probably more than that 1.5 billion that was stolen from Bybit. So I think you, as a trader, need to have more realistic expectations. A good way for you to know that you're not expecting too much out of the world is to know what an ATR is, which is an average true range. It basically tells you how far an asset is expected to move in the day. It's like the implied volatility. And that is a good guide as to, hey, if something moves 2 times its average true range, I would immediately want to take profit because we know we're in an overbought situation. If you have 2 ATR move to the downside, then you're looking at an oversold condition. I mean, maybe you get 3 ATR. That's like you know, really should be thinking of a reversion to the mean trade and taking a scalp. Um, so yeah, not to be rude, dude, but I don't know what you were expecting, and I would love for you to make another comment in this video if you're watching this and not just a Cardano fan, to let me know like exactly where was my miscommunication. Like, am I making these videos and making you guys think that this move is coming in the next day?
No, I'm telling you, be ready for the move. It's coming, but it's on a weekly chart. So you got to wait every week for that accumulation. And all I'm pointing out is the possibility of where it can go if that accumulation doesn't occur. So, yeah, Mr. Real Unreal YH5BW, it's not a guess, it's a possibility that I'm giving you. All trading is calculating the probabilities that you will have the right direction, and that's it. It's not certainty. Cardano ain't going anywhere unless people actually put money in it. Nobody gives a crap that you put your money in it. You have to get an institution to put their money in it for you to have your buy being profitable. Okay? Uh, Institutions, they don't just give charity out, my friend. The market is not a playground for children. You will get yourself checked and beat up and robbed by people like me and the institution who have patience. We know where we're going. Do you have the patience to wait for it to mature into that reality? If not, you should not trade. You should be an investor. Trading is gonna be detrimental to your mental and financial health. I highly, highly consider. I would suggest you become a long-term investor, and I'll give you that stereotypical stupid answer: invest in the index fund and just stick to the industry average. Because if you try trading and you suck at it, which 90% of people will lose. Oh no, what is it? The fact is 90% of people will lose 90% of their capital within 90 days. That's the rule of trading. 90% of people will lose 90% of their money within the 90 days of trading because they don't know what the hell they're doing. So just understand that the markets are meat grinders. People consistently put their money in the market and it gets taken away by people who know how to trade. And that's why trading is one of the most profitable like professions. They make more money than surgeons and doctors and whatever you can think of. Traders make the most money. The ones that know how to do it, the ones who do it professionally and long term, they make the most money per time than anyone else. Their opportunity cost, they understand what opportunity cost is. They know how to use leverage and their their margin to make more returns, bigger returns than other professions that I can think of. I mean, like there is no profession I know that makes more money than a person who deals in finance and money. Okay, no doc, and I'm from medical background. There ain't no doctor that's coming near the zeros that I know that trading can accomplish unless they're investors with taking their doctor money by breaking their back every day on top of their patient. They take that income after they pay down their school debts and whatever other overhead they have of their practices and their um, employees and stuff, and then they take that money and whatever's left they invest it either in the stock market. I know my doctor, all the people that I was in medical with, they used to trade on the side between patients, man. You have 30 minutes per patient. They're in the 5-10 minute prep room, break room, scalping, thinking they're scalping, and then they're going to see the patient. And then at the end of the year, I remember that year, my doc was down like 150K. So this dude is breaking his back to make like 300, 400K in dentistry, and then he's losing 150K. And then you know on what? Freaking like spy and like just just silly trades. He didn't know how to trade. I mean, it was obvious he didn't know how to trade, but he thought he did. And him making a little bit of money, he thought he was a good trader. But at the end of the day, if you check the P&L, it was all like pretty negative. So a lot of people are trading for that extra income, even though that they're in like the highest professions. So, you got to be like Nancy Pelosi, okay? She's doing her job. You think she's over here trading? No, she's got somebody managing her money, doing all her trades. When everyone sees Nancy's making money, they're like, oh, Nancy, she got insider, blah, blah, blah. No, man, it's not Nancy making the trades. She's got a freaking portfolio manager that's doing all of that stuff. If you want to make money, go freaking invest your money with that guy and let him take a cut, and he'll make you. You know, Nancy Pelosi's freaking yearly salary is like 100K or something like that, and she's making $100 million in like a quarter. So that just goes to show you, the real money is in trading, and that's why I tried to learn trading over any other profession, because I knew the reward will be way better long term. And this is a skill no one can take away from me for the rest of my life. So as the world becomes more AI and more digital prone, trading will become more regular. Even Nasdaq decided they wanted to go 24 hours like crypto and trade all day, because the exchanges only make money when we trade. All these assets are just pictures and colors on a screen with numbers. They don't really mean anything. It's you taking your hard-earned currency, investing it into these random assets, and expecting to sell that asset back for more money than you put in. That's what trading is. You're not taking this Velo asset and paying your bills with it. No, you want to buy Velo at 1.05, and you want to sell Velo at around 2.18, and that would be a return of around 77% whenever that happens. And that's basically the point of trading, and that can happen on any one of these assets. For first of all, look, Bitcoin is under 90K. We already warned you where Bitcoin's going to go under 90K. ETH lost 2,600. Weren't we talking about this big major dump coming to the downside? Here you go. So this is the point that I'm trying to make, guys. Please be aware of what the markets are and what they're doing. If you have any questions or concerns, hit me up in the comment section below, and I'll get back to you on the next asset video. The next video is going to be Dogecoin. We already got that request in. If you guys have a request for another coin, please leave it in the comment section below, and I will get back to you in my nearest convenience. Don't forget to like the video. Don't forget to subscribe to the channel if you haven't already. Please share this video that are with other investors and traders, so we can get them all on the right path. And if you have any questions or concerns, leave it in the comment section below. And the comment section below also has all the affiliate services that I use and recommend that helps the channel grow, guys. So thank you guys so much. Have a great day, and I'll see you guys in the next one. Be safe.